This TFMR podcast is brought to you by your friends at JM Bullion. Visit jmbullion.com for all your gold and silver bullion needs. Welcome back to your TF Metals Report podcast highlights for the first week of August 2022, a week that we knew would be dominated by data, economic data, because Fed Chairman Powell told us that last week. His comments about being data dependent going forward helped drive a tremendous move. Short covering rally in both COMEX gold and COMEX silver. Silver up over 10% in just 3 or 4 days and brushing up against its 50-day moving average for the first time in a couple of months. Looking at that chart and all of that discussion was all part of what we covered at TF Metals Report on Monday, August the 1st. Where silver came within about 5 cents of its 50-day today. Just on Friday, I told you it's probably going to go there today. And sure as hell, here we are. Got to 2051. 2058 or so is the 50-day. It'll be a little lower again tomorrow. Silver also. RSI is up to 59. But when you go, and what was it last week? Not even 40. But when you go from 1850 to 2050 in 4 days, that's going to happen. But it's not like it's 79. So the challenge here, obviously, is to get above 2050. That's that low back there in May. Okay, and kind of got close there in June before completely collapsing in that final stage of the sell-off earlier this month, or last month in July. 2050 is huge. Get above there, close above there, stay above there a second day, like later this week and through Friday. And we'll be talking 22 and even 2250. On Tuesday the 2nd, COMEX gold also began to approach its 50-day moving average. Getting above those levels would be important if we're going to keep the pressure on all of those spec shorts, those hedge funds that are short the futures contracts. If we can get them to cover, it will boost price even farther. But you got to get above some key technical indicators, and that's why watching that 50-day moving average is important. And again, that's all part of what we discussed on Tuesday, August the 2nd. So here you go. Here's gold. This printed the COMEX close 1789, but like I said, it just washed out all afternoon. Last I have with the Globex reopen is 1776, low of the day down 30. So you can actually put an upside down hammer thingy is what this should be. Okay, yeah, maybe we'll come all the way down and test the 20-day of support before swinging higher and eventually getting above the 50-day. It's one way to look at it. But if the BLSBS prints 500,000 jobs, they may jam us right back down, and we may try to come down for some kind of double bottom near 1720. We're just going to have to see. Data dependent. That's what happens when you become data dependent. So as we watch those key technical indicators, we look for other markets that are following out the kind of the same pattern to get out of a bottom and maybe start a new rally. The S&P 500 has accomplished just that. S&P 500 has bottomed, has moved above its 20-day moving average, and then it moved above its 50-day. It's exactly what we're hoping to see the precious metals do. So we discussed the chart of the S&P 500 as an example to give you some idea of what to look for in the days and weeks to come. I want to show you the stock market next because since last week, we've been talking about the recovery from these washout lows and how gold and silver, but not so much the GDX, had gotten above their 20-day, made a move on the 50-day, and now both of them have been, shoved backward. But that could still change, and I'll show you that in a second. Well, look at the S&P. Clear, obvious downtrend, right? Down, 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 down to that low in early June, middle of part of June. Ever since then, though, first could not get above its 20-day of the green line. Okay, fiddled around with it, finally got above it, and then got above the 50-day, then pulled back and tested the 50-day for support. And now it's going up enough, the 20-day has actually bullishly crossed the 50-day. The S&P looks pretty good. See if it can get back above 4,200 or so, maybe by later this week. And then 4,300 will be a big level. But this looks like maybe the lows in the S&P, and so that's the kind of the pattern of crossing moving averages, forcing some short covering that we want to see unfold in the precious metals as well. On Thursday, August the 4th, and with 1 day to go before that all-important U.S. jobs update on Friday, we took a look at the dollar index. Could it be topping? If it were to top, that would certainly help put a little wind in the sails of the COMEX precious metals. However, it was finding support at its 50-day, not resistance like the precious metals are, but support. So it needs to break down. Would it break down? Could it break down? All part of what we discussed Thursday, August the 4th. Okay, the dollar faces a very important day tomorrow. As we laid this out for you with the chart yesterday, there's a little downtrend line on the dollar that the index tried to get above yesterday and failed off of that high from, I don't know, not quite a month ago yet, middle of July, where it was up north of 109 intraday and then fell back. Remember how that it was so extremely overbought and everything else? Okay, well now it's definitely trending down. Failed to get above that trend line yesterday and sure looks like it wants to test the 50-day. Probably as soon as overnight or tomorrow. The 50-day is about 105.20. Like I said, I got a last 105.60. We'll see. Very important day for the dollar tomorrow. And on Friday, August the 5th, another bogus U.S. jobs report was used as cover to absolutely smash the precious metals again as the bond market sold off sharply with higher interest rates. The dollar soared and the machines took it from there. Why do we call it a bogus jobs report? Actually, the TF Metals report, we call it the BLS. Comes from the BLS, the Bureau of Labor Statistics, and it's usually full of BS. This report was no different. Of the 500,000 alleged new jobs, 309,000 came from the statistical guesswork made up Fantasyland birth-death adjustment. Of the other 200,000 alleged jobs, most of those were part-time jobs, where people are getting fired and laid off from their full-time job and then taking, say, 3 part-time jobs to try to replace the income. The BLS sees that as a net gain of 2 jobs. Pretty cool math, isn't it? Doesn't matter what I think, though. It matters what the market thinks. And like I said, bonds sold off, the dollar rallied, and that smashed gold backward. However, gold did eke out a positive week, another green candle. That's 3 in a row, as it continues to trend sideways now for the last 2 years in kind of a $300 flag with $1,700 as a floor and $2,000 as resistance. Again, flagging now in that $300 range for the last 2 years. We'll wait to see which way it breaks out. The key thing to watch will be that 50-week moving average, which is pretty much right in the middle. We'll see if we can't get back above there in the weeks, maybe the next couple of months, that sort of thing, before we can maybe take another stab at the top of the range. But for now, we'll wrap this week up and look forward to next week. The CPI, the next update on consumer prices, comes out on Wednesday. That'll be the centerpiece of the week. We'll be talking about that next week at TF Metals Report. We hope to see you there. We also hope to see you back next weekend for another edition of the TF Metals Report podcast highlights.